This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, as always, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here with the S&P 500. Of course, yesterday we had large amounts of volatility after the closing bell due to the fact we had Amazon and Apple report after the bell. And it's fair to say that Amazon's quarter was not good, or their guidance wasn't good. And that stock was down 20% at one point. I don't know how much it is pre-market, but I can guess it's probably down around 15%. I think last time I checked, it was down around 13.5%. So where that stock opens is anyone's guess, but as you can see, it's clearly a negative report and investors were not impressed. And of course, Apple was actually not too bad. They did miss on their iPhone revenues, but apart from that, it was a pretty good quarter considering everything that's going on. But what's clear here from a technical perspective is that we are still trading in this downtrend. We didn't break out. We went up and tested this downtrend that we've been trading in since August 16th when we topped. And it becomes a little bit tricky to forecast because from a technical perspective now, you would argue that we're most likely to go back down towards the lows here, down at around 3,650, 3,700, let's say. But also from a fundamental perspective, it does become a bit complicated due to the fact when we look at the markets from a seasonal point of view, right now is a very bullish time to be buying stocks. Of course, all these hedge funds and banks, etc., they're going to be working hard for their bonuses. And from a seasonal perspective, right now, all the way up until Christmas is a very bullish time. In fact, it's the most bullish period of the year for the stock market. And many analysts out there are expecting a rip your face off rally going into the end of the year. But, again, from a technical point of view, it doesn't look like that's the case. It looks like we are going to be trading lower. So I see the 0.382 fib area as a very important level, which currently sits at around 3,811. If we break above that, then you need to be cautious for upside risk. But at this moment in time, we're looking bearish, and it looks to me that we're going to go and target that 0.23 fib area, which currently sits at around 3,691. So if I had to put a trade on here, I think that I would be selling down towards that 3,700 area, as that, from a technical perspective, looks like the most obvious target. But on the flip side, I wouldn't be surprised to see this thing go and retest the top of this uptrend as well.